Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar is taking advantage of its competitors' weakness. Stock indices show no signs of falling. Gold is out of politics, and Bitcoin is setting a record. The US dollar continued its advance, thanks to the weakness of its competitors. The political crisis in France has heightened the risks of early parliamentary elections and the potential resignation of Emmanuel Macron as president, thereby putting pressure on the euro. The new leader of the Liberal Democratic Party and soon-to-be Prime Minister of Japan, Sanai Takaichi, supports fiscal stimulus and opposes interest rate hikes. Doubts about the central bank's independence have weakened the yen. Dollar fans are not put off by the almost 80% chance of a cut in the federal funds rate from 4.25% now to 3.75% by the end of this year. The worsening political crisis in France could slow down the eurozone and force the ECB to resume its monetary easing. Keeping the Bank of Japan's rate low will give the green light to carry trade, pushing USD/JPY higher. The shutdown adds uncertainty. On the one hand, the Fed is not receiving important data for lowering rates. On the other hand, alternative statistics signal a weakening jobs market and push the central bank towards further policy easing. The S&P 500 hit its 33rd record high this year. News of Oracle's meager profits from its collaboration with OpenAI led to a pullback. However, investors immediately bought up the dip, willing to wait until AI technologies deliver impressive financial results. Coupled with expectations of further Fed rate cuts and the imminent start of the corporate reporting season, this is giving the stock market a boost. When the S&P 500 set records in September, it maintained low volatility, changing by no more than 1% over the latest 31 trading sessions. This is the longest streak since the pandemic. Due to the shutdown, investors are hungry for information and are eagerly awaiting the start of the third quarter corporate reporting season. According to Wall Street forecasts, earnings will grow by 7.2%. This is the slowest pace in 2 years and could easily be exceeded by actual data. This will be a new driver for the S&P 500 rally. Gold is outside the realm of politics. While currencies and securities depend on the actions of presidents and governments, precious metals do not. Therefore, political turmoil forces investors to use them as safe haven assets. The impressive 52% rally in gold started in April with the introduction of tariffs on America's Liberation Day. It continued due to the US government shutdown, the political crisis in France, and the change of leadership in Japan. The rise of gold above $4,000 per ounce is not only the result of the weakness of fiat currencies. There are tectonic shifts in the structure of investment portfolios and fears of financial crises due to government recklessness. The share of precious metals is growing both in speculators' assets and in the gold and foreign exchange reserves of central banks. The indicator has already exceeded the share of the euro. According to Eurozone Capital, if it equals the share of the US dollar, the price per ounce will soar to $8,500. The Supreme Court's abolition of tariffs will inflate the US budget deficit. France does not intend to reduce it, and Japan plans to increase bond issuance. All this creates a tailwind for commodity assets. Bitcoin managed to reach a record high of over $125,000, thanks to the crisis in public finance. Politicians are inflating budget deficits and increasing public debt. Servicing this debt is an unbearable burden for economies. At the same time, confidence in central banks and the currencies they issue is being undermined. Presidents and governments want to force regulators to lower rates, as in the US, or keep them low like Japan. As a result, demand for alternative financial instruments, such as precious metals and cryptocurrencies, is growing. By the end of the week on the 3rd of October, investors had poured $3.2 billion into Bitcoin-focused ETFs, the second largest inflow in history. Cryptocurrency bulls are receiving double support. On the one hand, cryptocurrency is seen as digital gold and an alternative to centralized finance. On the other, Bitcoin remains a risky instrument. At the same time, the relentless rally of the S&P 500 is giving it a boost. The main question for the coming week is when the shutdown will end. The White House is nervous. Donald Trump first announces negotiations with Democrats on healthcare issues. Then he says that this is only possible after the government resumes work. Republicans are asking the president not to carry out mass layoffs of civil servants. This would lower his political ratings and undermine confidence. The government shutdown casts doubt on the release of important reports on the U.S. labor market and inflation. Investors are trying to focus on alternative data, while the Fed is moving in the dark. In Europe, the markets will be focused on the political crisis in France. Will Paris get a fifth prime minister, or will it go down the path of parliamentary elections? The key question in Asia is how the new leader of the Liberal Democratic Party, Sanae Takaichi, will behave. She is a supporter of Shinzo Abe's Three Arrows policies. However, Japan is not currently fighting deflation. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.